Hey, Andrew Woodward from the Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 83. And unfortunately, or maybe fortunately, but from my perspective, unfortunately, we have to talk about interest rates again. It's a big topic, and it's taking a lot of different directions in the last week since we last spoke about them. So let's have a look at a couple of aspects of that discussion and see what impact that is likely to have on the rate decision that will come before the next Weekly Wisdom video comes out. So we're going to talk about the Trump tariffs could stall the rate cut. And as much as it pains me to talk about him, we are going to have a look at what the tariffs, what impact they're going to have on the RBA and what the different commentators are suggesting in relation to those tariffs and why it might lead to a rate or the stalling of a rate cut. So here's the fuller headline: Uncertainty is the enemy. RBA could hold rates on back of Trump's tariffs. So that gives the game away. It's the uncertainty that may stop the RBA from cutting rates, because no markets, whether they're stock markets, property markets, financial, government, all that type of stuff, no markets like uncertainty. So the article here is suggesting that obviously the Australian government is going to still try and get some exemption from this tariff imposition. The latest news we had, which may have been after this article was first written, but the news we have at the moment is that the American government is fairly staunch on the fact that there will be no exemptions for the steel and the aluminium, as we pronounce it over here. There will be no exemptions for steel or aluminium. And as a result, whilst we're out there trying to get an exemption, it puts the whole steel and aluminium market in Australia in a bit of limbo as they wait to find out whether or not this recent announcement will be in force for the longer term. And so we are, like it or not, we are in the mix of a tariff war. And we're certainly seeing some very aggressive tactics, obviously, out of the US. But the retaliation has been just as aggressive, particularly out of Canada and to a lesser extent, Mexico and China. And so until we get some clarity on what's going to happen with that steel and aluminium market, there's going to be a bit of uncertainty about what impact that is going to have on the US economy, the Australian economy more broadly. And this article talks about the 25% tariffs and how we're lobbying, but the reality is at the moment they're in, and we're going to have to deal with them. And depending on which commentator you listen to, that's either going to be short term, long term, medium term, or everything in between, of course. But ultimately, what we're looking at here is whether or not it's going to have, in this case, a catastrophic impact on our steel and aluminium exports to the US, because obviously it makes our product less competitive, and therefore the American importers will be looking to get their steel and aluminium elsewhere. But given that that's been imposed all around the world, they're going to have to try and get it locally. And that has obviously been the US government, or the Trump mantra, is that he wants everything done in the US and to be damned with the rest of the world. But that can't just happen overnight. And when we're talking about major markets and massive contracts, that's not going to happen overnight. And so that's, again, where the uncertainty comes into play here. And so that could cause the RBA to pause their decision. And despite that, money markets, so the financial markets, are still factoring in a 90% chance of a rate cut in February, which is only slightly down from 93% before the announcement of the tariffs. And then you've got Saul Eslake, who's a well-respected economic commentator. He believes that it's unlikely that this uncertainty will stop the rate cut in February, given everything else that we need, the reasons why we need those rate cuts. And so there's hope for those mortgage holders that there will be that relief coming in the next week or so. And ultimately, there's a bit of talk in this article about the impact of tariffs on foreign currencies. Basically, the reason they're bringing that up is if the standard response when a country imposes a tariff is that its currency strengthens. And so if the US currency was to strengthen, that would weaken the Aussie dollar, and that would have an inflationary impact and could be another reason why they might hold off on the rate cuts. But as Saul Eslake points out here, the US currency since the imposition of the tariffs has actually fallen, and therefore that has helped the Aussie dollar a little bit. So that's interesting. And the other thing that I found interesting in this article, I think I've skimmed over it at this point, but the interesting thing was that one of the other things that could be causing the RBA to be nervous is they actually haven't cut rates in over 4 years. So it's not something they've done for almost or over 4 years. And so pulling the trigger is always going to be a difficult decision. Now, I don't want to just finish there, because the story doesn't actually finish there. Like, yes, this is like most things in the economy. There are always more than one lever having an impact on the decision making. So yes, we've got some tariffs being imposed on a part of our economy, a big part of our economy. But at the same time, and I won't go to the story, but you may have heard that some of the banks are reporting record profits, which is always a mixed signal in terms of it's great for shareholders, not so great to hear that your bank is making record profits when you're paying high interest rates. But Westpac in the last week have decreased by 0.4% their fixed interest rates. And if you've been following along with the weekly wisdoms for any length of time, you'll know that in the past I have suggested that when fixed rates start falling, that is a very strong indicator that the banks believe that the variable rate is going to start falling as well, because the banks never or very rarely lose when it comes to their fixed rates. So if they're seeing and they're moving interest rates lower because their cost of getting cash is dropping on the longer term markets, that is a very strong indicator that the shorter term rates are going to be dropped in the not too distant future. And so with Westpac taking the leap of 0.4%, it's made them now the cheapest in that sector, in the fixed interest longer term market. They have now got the lowest rates, and that is a very competitive advantage. And they will use that advantage to entice borrowers to go and lock in interest rates that are much lower than what they're probably paying at the moment on their variable rates, except for those people who still are on those fantastic low rates, that a lot of people will finally see them expire this year. But if there's an enticing offer out there that is significantly less than you're paying today, then people are going to take it. And my warning for those people that might be enticed to take up these new fixed rate discounted rates is that the banks rarely lose. And so last week we talked about the theory that we're likely to see 1 to 1.5% cuts in variable rates. If you go in and lock into a fixed rate that's only 0.4% lower today than it was last week, you might be shooting yourself in the foot. So I think at the moment, with interest rates, once again, we have to wait and see. The meeting is only next week, and so we don't have to wait too long now to see what move we're going to get for the first meeting of 2025. I hope I have my fingers crossed for our mortgage holders out there that the rates will come down and we'll get some relief. And then another article that I considered for today's weekly wisdom was the age-old story about when there is a rate cut, if you keep your repayments at the higher rate, then obviously you'll pay off your loan more quickly. But I think with this first one, there is enough people feeling the pain of the cost of living crisis and the high interest rates that there will be some welcome relief to be able to drop your payments and get that relief in your weekly budget or household money plan, as it should be, not the budget word, but the money plan. And I suspect that is going to be more likely the response of most people with loans, is that they will take advantage of that relief and use that extra money to, in the short term at least, just deal with that cost of living, with groceries going through the roof, fruit and veggies, all those types of things, just going through the roof at the moment. If you turn on most news programs, you'll hear a lot about the price of eggs, whether it's here or overseas. Here it's more so a shortage. In the US, it's about the price. But the cost of living crisis is real. And so any interest rate cut, more than likely, I believe people will use it to get some relief. But there is, if you're looking around, you'll see there is the common suggestion that you keep your repayments where they were, build up some buffer, and obviously reduce the length of your loan quite dramatically by doing that. Either way, either choice you make, I think a little bit of relief is coming next week. It would be great to see it. And I encourage you to review your money plan when you know your new numbers and put your money to good use. And good use means obviously looking out for your future self, where you will not be earning an income or don't want to earn an income, and you want to have the assets to support your lifestyle. So if you're watching on YouTube, hit that subscribe button and the little bell to get notified when we put these videos out. If you're watching on Facebook and LinkedIn, hit the like button. Even give that share a little bit of a nudge. And even in the comments, just give us a thumbs up or a thumbs down or whatever, a smiley face, whatever it takes to just indicate what you're thinking about these videos, so that we know that you're there. And we put out more of these, this type of content that is helpful for you to understand the headlines and the real stories that go behind those headlines. So fingers crossed. Hopefully we can see a rate cut in the next week, and maybe in that time frame we might be able to get some relief from the Trump tariff on aluminium and steel. And if that does come through, I think the likelihood of that rate cut goes up again in likelihood. But it appears at the moment that that's not going to happen. But still, fingers crossed we get that rate cut, put it to good use, and free up some pressure that's been on your money scenario ever since those rates went through the roof over 18 months. So that's it. Woody's Weekly Wisdom, episode 83. Hope you enjoyed. Feel free to leave us a comment and let us know what you thought. And I'll see you again next week for another episode of Woody's Weekly Wisdom. Cheers.